Christina Anka Metcalf has been active in the daily trading investment arena since 2003. She trades different asset classes, equities, ETFs, Forex, and futures, with emphasis on stocks and Forex. Over the years, she has created a unique and highly successful, simple and easy to follow trading system based on price support and resistance levels, coordinated with trigger times, chart correlation, and a proprietary set of rules that enable her and her traders to be very selective, patient, and find high odds trading with ease and laser sharp precision. She has translated complicated technical analysis patterns into simple, understandable, applicable methodology that helps traders succeed in a fraction of the time and become consistent traders by following her approach to trading. So without any delay, let me go ahead, let me introduce to Anka Metcalf from Trade Out Loud. Go ahead, Anka, you can take it away.
Okay, perfect. Thank you so much for the wonderful introduction, and thank you so much, guys, for having me here today. And I will be sharing with you my presentation for the next 45 minutes. So my presentation today is 5 winning steps to that 5% of the traders use to make a killing in a market. And guys, do you know why only 5% of traders use what makes them so successful? Well, this is what I will be revealing today. And why only 5%? Because these 5% really follow a really well-tailored plan. And I'm going to share some hints with you in today's presentation. For those of you that want to get a hold of me, this is my email. It's info@tradeoutloud.com, and all the emails that are going to come through this weekend, I will personally answer them. Also, you can find me on Skype, on Facebook, and on Twitter. You can find all this information also posted on my website, tradeoutloud.com. All right, so before we continue, I want to share with you the risk disclaimer, and basically what I'm saying right here is that all information is for educational purpose only. It should not be construed as investment advice. And if you guys really need to seek financial advice, consult your financial planner, broker, etc. So thank you for the introduction. So I am a professional trader. I've been trading for more than 11 years now. Equities, currencies, and futures as well. I love trading equities. It's my absolute favorite. I am the founder or CEO at Trade Out Loud. But before becoming an independent professional trader, I spent over a decade in investment banking. So I do have a lot of investment banking experience that really helped me throughout my my trading progress and process. I am certified from numerous financial institutions throughout Europe and U.S. I do run a managed accounts program for high net worth clients, and I do run a signal service program for swing trading equities and ETFs. Like it was mentioned in my presentation, I am the designer of a proprietary trading system that is based on price support and resistance that we're going to be talking about a little bit about today. Specific trigger times correlated with chart timing, and altogether with a set of precise trading rules. You could also find my work and a lot of my articles in some of these magazines that you see right here. They're also on the website. But before we continue, guys, I want to get to know my audience. And for this, I'm going to ask you a few questions. Number one is if you have trouble identifying high odds trades, if you could please type an A into the room, I would greatly appreciate it. I just want to know what the level is here. Type a B in the room if you're not disciplined enough to stick with one single strategy. Type a B in the room right now. And you know that even when I started trading, I was trading all over the board. So yeah, I didn't stick with a single strategy, and that didn't get me very far. So I had to regroup in a couple of months. Also, I don't know when to exit my winning trades. I mean, how many of you guys have a winning trade and then you're right in front of the chart and you go like, oh my God, what do I do now? What do I do now? If there was only someone that could tell me what to do now, right? Okay, and type a G in the room if you fall under this category. I never know how much I'm risking. Okay, so I never know how much I'm risking. Oh my God, I'm getting a lot of A's, I'm getting a lot of B's, a few C's, C, and D. And you know what, guys? all these issues that are right here, they're simple fixes, and all you need to do is have a really good blueprint, okay? It's not that you're not educated, it's just that you need to get organized, and this is what we're going to be talking about today. So, going into today's agenda, why is it important to have 5 steps? And 5 steps that you need to take every single time before taking a trade. Why that is important. The next thing is I will be revealing the 5 steps that you need to follow starting as soon as Monday, or for those of you that are Forex traders, you can start them tomorrow at 5 p.m. Okay, and then applying the 5-step strategy to your strategy. It is a very unique system, and you're going to see that it's super simple. Also, questions and answers, guys, and if I don't have a lot of time to answer your questions today, please email me at info@tradeoutloud.com, and I'll make sure I'll answer each and every single one of you. So let's start with this. Why is it important? Why is it important to follow these 5 steps in order to be in those 5 top % of traders? Not only that they make a killing in the market, but they're living the life. Well, because you want positive results fast, and I'm going to show you how you can get those positive results fast. I'm going to show you how you can cut your learning curve. Also, positive results and fast. This is what all we need, right? And everybody wants, especially when they first start trading. Then the next thing is that this plan will improve your trading confidence. All right, knowledge is confidence, and therefore you're going to know how to act and react at certain times in the market and in each, in different market areas that you trade. Also, it will improve your decision-making skills and results, which is very important, right? Also, it'll keep you away from repeating mistakes and even eliminate some of the mistakes that are recurring. Also, it will create focus. It will create you a lot of focus. You're going to be zoomed in into what you need to do and not what others are telling you to do and what others are saying. You're going to learn how to act based on your own decisions. And guys, I think this is the most important of them all. First of all, when you start implementing this system, your account is going to stop leaking. You're not going to see those negatives anymore. So you're going to go from that phase from red to break even to actually building up that account. And it takes you from a novice trader to a trader that can pull consistent profits out of the market each and every single time. All right, so what are the 5 steps that 5% of successful traders take? Number 1, and I think, I've been here a little while and I've heard the presenters before me, and we all have a common denominator, and what is that? We all have a game plan, right? It is very important for you to have a game plan, a trading plan that is going to tell you exactly what you need to do. Now, it doesn't have to be long and sophisticated. It just has to pinpoint out what you need to do at specific times and how to react. And this way, you're going to eliminate that, oh my God, what do I do now? I'm in a winning trade. What do I do? Do I take it here? Do I trail it? What do I do with it? So it's going to give you more clarity. The next thing that it's going to do for you is going to teach you how to focus on the technical image, because the technical image is almost everything. Now, it's not everything, it's almost everything, because we are surrounded by geopolitical context, and we are surrounded by different events that happen in the market. For instance, last week we did have Federal Chair Yellen that testified. We saw the market dive a little bit when she first started testifying. Then the week before we did have the FOMC meeting minutes. So therefore, there are other things that are influencing the market. So therefore, you got to focus on the technical image, but please keep in mind those geopolitical and economic aspects as well. Also, risk to reward, very, very important. Know how to apply it. Know how to ratio that. That is extremely important. We're going to talk about all of these steps today. Position sizing. Now, I know that many of you may say, okay, I know how to position size, but guess what? When you're first starting trading, everything is new to you. You're probably going over a weekend of classes, a weekend full of seminars, and then you are on Monday, it's you and your computer, and you're going to go, okay, oh my God, what do I do? You're going to be overwhelmed. So for that reason, you need to have this game plan that is going to keep you in check, and you're going to be your own boss. Okay, because nobody else is going to tell you what you need to do. You're going to look at the market and you're going to know what decisions you need to take, and especially if you're a beginner trader. Because, you know, when I first started trading, I thought like, yeah, I will develop a trading plan in time. I will develop a trading plan once I see if the strategy works. No, wrong. That was the wrong answer. So I kind of like spun my wheels, and for about 4 to 6 months before I started realizing, yeah, I need a little bit of focus, so this is what I need to do. And this is, I'm here today to share this with you. Also, trade management. Guys, you know, if you have a losing trade, you stop that, you know, no problem. But what if you have a winning trade? You know, that is where you need a lot of help and guidance. And this plan right here is going to show you exactly how to do that. Okay, so first of all, we're going to tackle the game plan, right? So you need to have a game plan. You need to have a trading plan. How many times have you heard plan your trade and trade your plan, right? There's nothing more true to this saying than what it is right here. So basically what it says is to plan your trade and trade your plan. So how many of you in here, and I know when I first started trading many years ago, you know, I started looking for a chat room because trading is very solitary. You need to socialize a little bit, and that was the only way, you know, to find out what other traders are doing. And you know, back in the day, I used to pay for a trading room somewhere around $600 or $700, and there were not a lot of trading education companies around. I believe there was one, maybe two, you know, and basically trading rooms were not around. So therefore, I started to. I was part of a chat room, but guess what? I was not trading my trading plan. I was trading somebody else's plan, and most of the time when I first started trading, I really didn't understand what they were doing. Okay, so it's very important to trade your own plan, to be the master of your own plan. Because you know that every successful business needs a trading plan, and so does your business. Your business is is basically your success, right? And basically you're the boss. You're the boss of whom, right? You're the boss of your charts. You're the boss of your stocks. Your stocks are your employees, okay? So, you know, just like an architect, you know, who creates drawings for his project, you need to have your own technical blueprint for your trading success. And there are some benefits to this. One of them is better timing. You're going to know and you're going to learn how to select your better timing for your entries, better timing for your scanning, overall better timing for your overall trading activity. It's going to make you more disciplined. It's going to keep you focused. It's going to create confidence because you're going to have the knowledge, and knowledge creates confidence. And therefore, you're going to be more focused and more disciplined. You're going to know when to trade and when not to trade. It will also eliminate emotional decisions. All right. Remember, there's one thing that I've learned very early on, and this was to stay in the trade longer. And not only that, but never jump out of a trade just because you feel like it. The market has to take you out of the trade. The trade has to take you out of the trade, okay? So we're going to be talking about this as well. Also, it's going to measure performance. Remember, it is very important to measure your performance and very important to determine what works and what does not work for you, and therefore, your emphasis should be on what works for you. Remember, all you need is one single strategy in order for you to be successful. You can make a living in the market, and not only a living, you can create wealth by using just one simple method, one simple strategy. It'll also keep you away from making and repeating and, of course, avoiding mistakes. And guys, overall, it's going to save you time and money. You're not going to run in circles, and you're going to go right to the point. You're going to get your education, and you're going to know what to do. So it's very, very important. Now, trading plan know-hows. There are some know-hows here. First of all, you got to define the strategy. So you got to define what strategy works for you, whether you're, and of course you're going to define what kind of trader you are, whether you're a day trader, whether you're a swing trader, whether you're a core trader. And once you determine what kind of trader you are, you're going to define your strategy. And make sure you elaborate on this a little bit. And that if you're, like a one strategy type of person, for instance, you love, breakouts or breakdowns, and the market has been great and beautiful for this. And I remember a time like 3 or 4 years ago, maybe more, when the success rate of a breakout or breakdown was only of had a failure rate of 75%. 75% failure rate for a breakout or a breakdown. Guess what, guys? These nowadays and in current trading conditions, breakout and breakdowns have been working 85% of the time. So they have been successful 85% of the time. So if you're a one-person kind of strategy, if you want to just apply one strategy to the game, just try with this. This is just an example. So define your strategy. Make sure that you define your strategy when you're going to enter the trade. Based on what? Where you're going to place the stop, where your target is going to be. So make sure you know all these elements before you jump into the trade. So this game plan is going to tell you exactly not only the strategy, but it's going to tell you how to find the trade, so best scanning techniques that work for you, when you can take action, and if you're a day trader, for instance, that there are, 5 particular trigger times in the market, and you got to focus on those. And those times offer you the best possible timing for the market along with your trade. It's going to teach you as well when not to take action and when to sit on your hands and just take a look. And just remember, guys, that if you take a look at a chart and you can't see a pattern, if you have to squint, then guys, the pattern is not there. The trade is not there. Just either move to a different chart or take a break and come back later and see if you, if the pattern has developed more over time. Also, optimum time for your strategy. You got to make sure you trade the strategy at the perfect time. There are strategies that work at different times of the day, so make sure that you choose a strategy that works for you at a specific time, and especially for day traders. For swing traders as well. And optimum time does not only refer to, to specific hours, but it determines, the time. So, for instance, if you're a swing trader, you're not, and let's say you want to trade Amazon, you're not going to initiate a swing trade in Amazon an hour before the close. Let's say if it reports earnings after market hours, you're not going to take the trade a day before. So make sure you know how to time your trade, whether you're a day trader or a swing trader. Also, how to analyze and correlate. It's going to teach you how to analyze and correlate market conditions to your specific trade, and this is very, very important. So learn how to analyze and correlate market conditions to your trade. Like we talked about before, there are geopolitical events, there are economic events throughout the week that influence the market, so make sure you know how to navigate through those. And if those are part of your plan, okay, and if you have a plan in front of you, a calendar in front of you in which you write down whatever happens, okay, you're going to learn how to be on the peak of the wave each and every single time and navigate the market. Plan, execute, and manage each strategy. Now, it's very important that you plan, execute, and manage each strategy. You plan ahead of entering the trade. You execute the trade, and then you manage the trade afterwards. Make sure you have a plan, a management plan in place, a well-defined management plan. And we're going to be talking about a management plan today as well. Follow up on trade evaluation as well, and position size to your account size. Also, risk management guidelines. Make sure you respect your risk management guidelines. And guys, risk management with position sizing go hand in hand. Make sure that you pay close attention to those. Some conclusions to having a game plan, to having a trading plan. Well, first of all, trading is 95% psychological, and that's why you need to have a well-defined game plan that you need to follow, because you don't want to take any reactions. You don't want to react negatively in front of an unforeseen event. A game plan can protect you against your own demons, and having a trading plan is the only cure against losses. And trust me, guys, when I tell you this, it is true. You need a well-defined game plan in action before you even take a trade and before you even pop up your platform. And remember, whenever you have, it doesn't have to be complicated, just a sheet of paper, just write down your strategy, the guidelines, whatever events are for the following week if you're a swing trader, or following day if you're a day trader, and make sure that you respect every single risk management, position sizing as well. We're going to talk about this. Make sure you respect all these elements in order to be successful. Okay, now zooming in on the technical image. Technical image is the most important thing in trading. Like I said, it's not everything, but it is 95% technical image. The technical image is the focal point of your technical trading. I'm a technical trading. I do pay attention to fundamentals, but I only trade based on the chart. My decisions are based on the chart. They're not based on fundamentals. Technical image is a skill that requires education, so make sure you invest in a good education. And you know, right now over the internet, and these days on the internet, you have a wealth of information. So there's no excuse on not getting educated. There's a lot of free education out there. When I first started trading, you couldn't find anything on the internet, trading education and so on and so forth. Then experience. Make sure that you spend time watching the market, even if you're not trading. Spend the time watching your charts, watching the fluctuations of the chart. Watch how they react. Even if you're not trading at, let's say, an FOMC meeting minute, watch and see how the market is reacting, how the Qs, how the SPYs, how Dow, how the diamonds are reacting, how the S&P is reacting to those specific market conditions. Also, pay attention to your stock, your pool of stocks that you're watching, and how they correlate compared to the market at those specific times. Also, make sure that you look at other events that are influencing the market and see how the market is reacting to those and how it is affecting your stocks as well. So there always has to be a strong correlation between the market and the stocks that you're trading, and outside market environment. Also, technical analysis skills are very important. I'm going to show you how they are important and how they can improve your trading plan and how they can make you a fantastic trader. Well, first of all, let's talk about this technical image. What does the technical image reveal? So there are some things that the technical image reveals. Now, what do they reveal? Number one, when you look at a chart, first thing that you notice is, for instance, a trend, right? You either notice a trend, whether it is uptrending or it is downtrending, or whether it is sideways, or, you know, whatever it is, first thing that you do is you look at a chart. When you look at a chart, you determine what the heck is going on with that stock, okay? So you determine the trend. The next thing that you're going to look at, and of course, because you're trying to find a trade, you're trying to see if this is a good trade or not, you're going to be looking at support and resistance areas, because those areas will offer you perfect entries, perfect stops, and they're also going to offer you projected targets. Okay. The next thing that you're going to see in your technical image are the trading patterns. So you're going to be able to see if the stock is in an uptrend or if it's on support resistance, but what kind of pattern is it in? Is it in a continuation pattern? Is it trying to change trends? So you're going to identify patterns, very, very important for your entries. Like I've mentioned, you're also going to be, this is going to be the focal point for your entry point. So you're going to find laser sharp entry points based on these levels, based on the technical image alone. You're going to find stop levels, and all these entry levels and stop levels, they're all based on this support and resistance. Also, potential profit targets, like I've said, previous support, previous resistance, and also other technical tools are going to show you, like for instance Fibonacci, the stock or an indice is at all-time high, okay, like for instance Dow, okay, Dow is at all-time high. What's the next target for the Dow? Okay, so there are some simple tools that you can use. You can find them on each and every single platform. They're called Fibonacci retracement or Fibonacci extension. Price, where you could determine price projections based on those, in which most of the professional traders use to determine future profit target areas that can be met, right? Okay, and of course, last but not least, you're going to find out from the technical image the market participation. Now let's take every single one of these in detail. Here's a chart of Autodesk, and this is a chart of Autodesk, yesterday's charts actually of Autodesk. Beautiful pop right here into very close to the whole number, $57. You could see right here the uptrend. You could see the series of higher highs and higher lows that are made right here onto the daily chart of Autodesk. Also, if the stock would be in a downtrend, you would have a succession of lower lows and lower highs, and therefore you would have the downtrend. So first of all, when you take a look at a chart, let's say a daily chart, if you're a swing trader or the hourly chart, if you're an intraday trader, you're going to take a look at the 15-minute chart or the 5-minute chart. You're going to first determine the trend, whether it is a 5-minute or 15-minute uptrending or downtrending, and you're going to correlate that with your daily chart to have a sharp bias for the trend for that day. Okay. The next thing that you are going to determine is support resistance, and this is a chart of Facebook yesterday onto the daily chart. You can see a high level of, a strong level of support that has been developed right here at the bottom of this pivot, and you could also see that support after this move traded higher into a previous area of resistance. You can see the resistance point right here. You could see that it formed another secondary level of support higher in the higher area of $66, which it is right here. So this is support resistant, and it gives you a lot of clarity for your trades. Now we're going to be talking about this trade a little bit later on if we have time. This is actually a chart from yesterday's close. Okay, so also right here, it shows you patterns and the phases of the trade, which is very important. Right after setting this high, you can see that the trade has entered a distribution phase, followed by a consolidation phase and a change in trend with a gap up right here on this day. I believe it was on May 12th with a gap up and continuation higher. This is again an accumulation phase. So you got to make sure that you know when to initiate your trades. Now this, on the other hand, for those of you that are day traders and swing traders at the same time, this would have been a perfect entry right here with very tight stop at this area right here for future targets. And also, it shows you the entry point, and this is another stock. This is AA Alcoa. You could see right here a beautiful consolidation area and a pop over this consolidation area and a breakout higher. You can see the breakout higher. And by the way, guys, have you noticed a lot of consolidations on these charts that I've shown, 2 or 3 charts? Okay, so remember what I said, that consolidations are very, very popular right now, and market conditions are actually aligned to give us a lot of consolidations right now. Why is this happening? Well, most of the traders, a lot of traders are too scared to short, and a lot of traders are too scared to go long. So therefore, you have long periods of time of consolidation, and usually these things happen, once in a while. And there are cycles in the market when these consolidations happen. Okay, so we have entry points right here. It determines the exact entry point. Right here you could see this beautiful rocket bar that is breaking out above this consolidation area. So it gives you the exact entry point. So this is the technical image that offers you that. It's not fundamentals. It's not anything else. It is the image that shows you this. Also, another thing is that it shows your stop loss level. You can see it right here. The bottom of the pivot is support area. Remember, you need to have good knowledge of technical analysis, so you need to have good technical analysis skills. Support resistance are basic for trading. So therefore, it gives you the stop loss limit, and also you're controlling risk. And based on these two, you're going to determine not only your position size, but you're going to determine your risk size. I'm sorry, but according to this, you're going to see how much you're making to your next profit target area. The next thing is potential profit target area, because we're talking about this, and I told you that I am going to speak again about Facebook. And again, this is a very recent chart of Facebook. It's from yesterday. And you have here a very tight consolidation that is happening on the support level. And for any swing trader, this is a high area of interest right here. It is an area of resistance, and on any break of this resistance area, this can send the stock screaming higher into the next area of resistance, which is the area of your profit target. So remember, if you have a previous high or a previous low for short trades, these previous areas are considered profit targets. So you have a good risk to reward right here. So again, the technical image, it gives you everything. So it gives you the entry right here, it gives you the stop, it gives you the profit target. But what doesn't give you, what the technical image really does not give you right now, is how you need to trail it and your management plan, right? So that's what you need to have in your trading plan. Okay, also, zooming in on the technical image, you're going to have the market participation expressed in volume. You need to see when the volume is spiking up or the volume is quieting down. All right, so you can see that, right here on this chart of Apple, the volume is decreasing. All right, so you know how, and if you know how to correlate all these elements, and trust me guys when I tell you this, it's not hard. It's not hard. And one of the things that you need to do is to keep everything super simple. One of the biggest conclusions is to keep everything super, super simple, and don't overcomplicate your trading. Most often, I do a lot of coaching with my traders. I do a lot of live sessions with my traders from my swing trading programs. And one of the things is that they tend to overcomplicate their trading, and they're trying to see things that are really not there. Where what you're doing is you're actually looking at the chart, drawing some lines, and this is it. This is how you determine your entry. This is how you determine your stop. This is how you determine your targets, or you can project your targets by using Fibonacci's. Okay, some conclusions. Perform a thorough analysis of the stock and stock market conditions to determine if the odds are in your favor. Remember, always pair market conditions with your stock. If you have a relative weak stock in a strong market, you're more likely to go with a relative strong stock in a strong market, because that stock will outperform the market, has high odds of outperforming the market. And the same with the weak market. So when you're in a weak market, you need to focus on weaker stocks, relative weak stocks compared to the market, because those stocks have higher odds of following through lower than the market. So you get more follow through, you get more traction. So basically what I'm saying is that your stock is going to reach your profit target area faster. Okay. Okay. The other thing is never chase a trade. So if your trigger is at a precise area, don't wait 30 minutes to get in. You either get in, or if it took off without you, just let it go. There are other different 6,000 stocks that you can trade. Also, let the chart tell you what you need to do. Don't force the trade. Do not force the trade. This is very important. Evaluate the elements that we went through, and always trade with the trend. Because I get this question a lot. Why are you only pro trend trading? Well, I am pro trend trading because when the trend starts going, you have higher odds of your stock moving faster, higher to your targets, okay, than if you were counter trend trading. In counter trend trading, you have a high level of stop outs and a high risk of stopping out. And the other thing, you might not get to your target levels because you're in a counter trend. So that's why if you stick with the trend, your trading is going to be, and your trading is going to improve. It's going to get so much better. Also, wait for the trade to meet your blueprint. Make sure that, okay, so let's say, for instance, if your trading plan says that you're only going to trade breakouts or breakdowns, make sure that that's the only thing that you trade at specific times. So make sure you wait for the market. If the market is, is doing a buy scenario or a sell scenario, make sure your stock is correlated with the market. And if the market is into a buy scenario, you're getting into a buy scenario on your stock or ETF. So make sure you wait for the trade to meet all your specific criteria. Also, enforce discipline and patience. Like I said, guys, if you're looking at a chart, if you can't see a pattern, if you have to really squint and kind of like force the trade, don't do it. Okay, don't be a guinea pig. Okay, just let it trade. You can either move to a different stock, or if the market, because oftentimes, there are times in the market when the market is basically doing nothing. It is sideways, it is doing nothing, and use that time to scan for new stocks. If the market is very strong, scan for relative strong stocks. If the market is weakening, scan for relative weak stocks. So you're prepared. So you have a weak set of stocks on hand and a strong list of stocks on hand. So if the market continues higher, that is the strong stocks are the go-to stocks, and if the market is lower, you go to the weak stocks. Also, devote time to market and technical analysis. The other thing is invest in technical analysis classes at the beginning and not the end, guys. Okay, let's talk about risk to reward, and I love risk to reward. The success of the trade can only be measured in terms of risk, okay? So how many times I know I get tons of emails like, oh my God, follow me, I made 3% in this trade, I made 1% on this trade, I made 3% on this trade, I made, 10% on this trade. But is that, 10%, does that make him a really good trader? No, it doesn't, right? Because you have no idea how much that trader has risked for that, right? So if I tell you, okay, guys, I made $500 on this trade, does that make me, look good? Am I really a good trader? Or you don't know that. What if I risk $2,000 to make that $500, right? So success can only be measured in terms of risk. So what is my risk? Because if I risk $500, if I make $2,000, yeah, I'm a good trader then. So before initiating a good trade, you need to determine the fixed risk, the potential reward. But how? How are you going to do that? Well, first of all, you're going to take a look at the technical chart, and you see your entry area, your stop area, right? And you see your potential profit target area, right? So here you go, your entries, your stops, your targets, your risk, your reward. All right, so here you go. These three simple chart elements can help you calculate risk and reward. Entry minus stop equals risk, and target area is the reward. So the difference from your entry to your target area, that is your reward. Let's take a look at this picture right here. And take a look at this chart on Monday, guys. This is a very recent chart. Okay, let's say if our entry is right here over $68 and our stop is right here under $66 and our target is right here $72.59, this high right here. Our risk is $2 and our reward is $4.59. So the risk to reward ratio, this is what I'm risking and this is the reward right here, is 2.29R. So that means that if I risk $200 on this trade, okay, I could take this based on my shares, based on my risk, I could take it with 100 shares, and I can make $458 by the time it goes to this target area. Okay, so you tell me, guys, can a trader that has a 40% batting average be better than a trader that has a 60% batting average? Yes. Yes. Okay, yes it can. By using and applying an average, a really good ratio, at least 2 to 1, and I say at least 2 to 1, 3 to 1 risk to reward ratio for each trade, you can make money consistently. Now, the other thing is position sizing, and position sizing will determine how many shares you're going to trade based upon your account size, your daily loss limit. And position sizing will also determine your risk to reward. Okay, here's a simple example. Remember the $200 that I wanted to risk in Facebook on Monday? Okay, let's say this is my risk, $200 right here. Let's say, for instance, I have a 50-cent stop right here. How many shares am I going to take that trade with? 400 shares. And I'm going to do this each and every single time. And this is the key to consistency. Use the same risk on all trades. Don't risk $200 on a trade and $600 on another trade. Same risk equals same losses equal consistent controlled losses, right? And winners are the only variable in the equation. Now, guys, you have a bad trade. What happens? You stop that. What if you have a good trade? You need a good management plan. But why is that? You need to capture profits from multiple targets. You need to eliminate fear and greed. You need to eliminate that, oh my God, you need every single strategy to have a different plan. Each position will have its own life, capability to manage change in market conditions, define targets, and take profit area. And last but not least, to alleviate managing the trade. Now, there are 3 simple approaches. There are candlestick trailing, there's pivot trailing, and moving average trailing. And trading management comes as simple as choosing one of these, whatever makes you comfortable. For instance, in candlestick trading, look at this trade. Entry was right here. You could have stayed in this trade all the way to this point, and this point would have offered you another entry opportunity. Now, this is candle trailing. This is my favorite pivot trailing, keeps you in the trade longer. You're willing to live it through a little bit of pullbacks, but this is what you get. Okay, your entry, your stop, trail, 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 trail as each pivot develops. And moving average trailing, this is following the moving average. So each and every single time your stop touches your moving average of your choice, you place your stop under the moving average. Now, let's do a quick recap. You need to have a game plan. You need to have good technical analysis skills. You need to apply good risk to reward. You need to apply good position size and good trade management. Okay? So I have a surprise for you guys. Active Investor Trading Plan class is coming up Saturday, July 26th. It's next Saturday from 9:30 to 2:30. We're doing this because we had one class last week, was insanely popular. We only had 100 spots available. We did have tons available. We had a lot of traders that were interested. We could accommodate a lot of them. This is backed by popular demand. It is the last time that we're doing this for $39. This is a $499 class. You can register at tradeoutloud.com. Again, we only have 100 spots available. And this is not a class where I will show you how to build a trading plan and how to do it and this and that. You will actually get accustomed. So if you're new to trading, if you just received your trading education, this is a class that will share with you a custom swing trading plan that you can place and use the next day. This is ready-made. Ready-made. All you need is to apply it to your trading, guys. It's a swing and core trading plan. It teaches you how to enter where to enter the trades, place stops, trail, do damage control. We have a whole chapter in damage control with those crazy gaps when they happen to go against you. Scanning techniques, checklist, action plan, much, much more. It comes with a full manual, over 60-page manual, and the class is recorded. So if you can't make it, you can have the recording as well. So guys, this is $39. The spots are just flying. I just got to tell you that because I started to advertise this last night, and the spots are just flying. TradeOutloud.com. And remember, this is not a class where I will tell you what you need to do to have a trading plan and how to build a trading plan. No, this is a ready-made trading plan. Ready-made trading plan for swing and core trading stocks and ETFs. Okay. If you cannot attend in July, the class will be recorded. We will never do this again. So these were the this is the last time that we're having the class scheduled right here. So you will have the recording. All right. Are there any questions? I will be presenting. So you're going to be spending time with me from 9:30 in the morning to 2:30 in the afternoon. The recording, you will receive the recording. In your email. We will have archive links that will be emailed to you. So once you register, make sure you reserve your spot. If you cannot make it, you can enjoy the recording. And of course, after the recording, after you listen to the recording, you can place as many questions as you would like. So I'm available. I will personally answer you all the questions. I have a trading plan for day trading, but the class is only for swing trading, and this swing trading plan can also be applied to day trading. So yes, the day trading plan is a little bit different, but this plan can also accommodate swing trades as well, day trades as well. We will be tackling that because there are a lot of entries based on the 15-minute chart. So therefore, we're going to tackle that day trading portion of it as well. So it's going to cover that as well. So day traders and swing traders can both benefit from this class. It's really good. We had amazing positive feedback from our last Saturday's class. It was crazy popular. Okay, thank you so much, guys, and thank you so much for having me here today. And if you have any questions, you know where to find me, info@tradealoud.com. Thank you.
Great, and thank you today, Anka, for this wonderful presentation.